In a previous video, we talked about a question many homeowners eventually ask: should you defer property taxes? Before someone can decide whether a strategy makes sense, they need to understand how it actually works. So in this video, I want to walk through the mechanics of the BC Property Tax Deferment Program. At its core, the program is very simple. It allows certain homeowners in BC to delay paying their property taxes. Instead of paying the tax bill yourself each year, the provincial government pays the municipality on your behalf, and the amount becomes a loan attached to your home. Nothing changes about how you're living, nothing changes about ownership. The tax payment is simply postponed until later. Usually this is when the home is eventually sold. Another way to think about this is imagine your property tax bill arrives. Instead of paying that tax bill from your bank account, the government pays it for you. They then keep track of the amounts that they've paid, and over time, those deferred taxes accumulate. When the home is eventually sold, the balance is repaid back from those proceeds. So it's not a grant, and it's definitely not free money. It's simply a way to shift the timing of the payment from today to sometime in the future. So let's walk through a simple example. Imagine a homeowner with a property tax bill of $5,000 per year. If they continue paying that tax normally, that's $5,000 leaving their bank account every single year. But if they defer the tax instead, that $5,000 stays available for them to use. Over 10 years, that's $50,000 of cash flow that remains accessible. Now, the tax itself hasn't disappeared, it's simply been postponed. The deferred balance slowly grows as each year's tax is added on. There's also interest applied to the deferred amount, so the balance generally increases over time. But for many homeowners, the key consideration is the cash flow flexibility. They keep the money today, and repayment happens sometime down the road from the equity in their home. And this is where the conversation becomes more nuanced because, like most financial tools, this one comes with trade-offs. The first trade-off is interest. The deferred tax balance grows slowly over time, so some homeowners prefer to simply pay the tax each year and keep their finances simple. The second trade-off is psychological. Many retirees spend decades working to become debt-free. Paying off the mortgage is a huge milestone for them. So the idea of adding a loan to the home can feel pretty uncomfortable, but others view it differently. They see the program as a way to keep more flexibility in retirement. Now, neither perspective is inherently right or wrong, they simply reflect different priorities. So when we think about this at Sparrow, the question isn't whether deferment program is good or bad, the question is whether it fits the individual situation. Some people prefer simplicity. They pay tax every year and just move on with life. Others prefer flexibility. They keep the cash available and allow tax to be repaid later on from the equity in their home. Both approaches can make sense. The important thing is to understand the mechanics clearly before making this decision. The BC Property Tax Deferment Program isn't a hidden trick, and it isn't something that everyone should use. It's simply a financial tool that can change when a tax bill gets paid. Understanding tools like this is often where financial clarity begins, because once you understand the mechanics, you can step back and you can ask more important questions. Not just how something works, but whether it fits the life that you want to live. And ultimately, most financial decisions come back to one simple question. And that question is, what's important about money to you?